Let's talk to Rahul Khanna. He's an FX strategist for TraderMate. Morning to you, Rahul.
Morning.
Right, let's kick off with your first slide that you sent us, the US dollar index, the weekly chart over a 3-year period. What is this telling you?
It's telling us that the market, have sold off dollar quite a lot.
Yeah.
It's now at crucial levels.
Okay.
If you look at a long-term chart, this has not been around this low since early 2015. And why this relates importantly to the data is that US CPI is coming on Friday.
Right.
And US CPI has missed expectations before, and it's been on a downward slide. And since January, we've seen inflation continue to go lower, and so is dollars going lower. But now, if you look at the non-farm payroll last week, we had a really strong number. So now market is looking for, will the US CPI now, has it bottomed out, and is it going to now start looking up? And will Fed change its course in that regard? So if on Friday CPI do beat expectation and come in slightly positive, then this could be the starting of sort of a bottoming phase for dollar.
Okay. So really a key number on a key chart point, i.e. a historical low in 2015.
Yeah, so that low that we're looking at 91.91 is 2016 low. 16. Okay. But since 2015 has not been that low, so that is a significant low there. And also 1962 got tested, last week. So that's the first level. If that goes, then people start to worry about 91.91. That goes, then you're back to 2009 highs. And we're going to be looking at 89.50 area. If that breaks, at the moment it looks like it might find support. It's already found support just above there. What's again crucial is what happens with US CPI on Friday. So once we have a positive number on US CPI, we could easily see a rally back up to 95, 96 area.
Okay, so a key piece of fundamental data out on Friday. Let's go to the second slide on this, the US 10-year yields. So how does this?
So this US 10-year yield, if you look at this chart, this is also a weekly chart. Over I think year period. You look at it at 212 is where there's significant support, and back in June. Period, we saw that being tested, and market moved higher from there, and this coincided with Euro 10-year yields also rallying higher. This was after in Sinatra Forum, the ECB changed its stance, started to look a bit more hawkish, and so ECB took the US yields with it, because there was a more positive story going around. Now we're back to what we've seen in the last few weeks, as you can see, we have sort of a repricing. So markets come down back. Now 222 is now sort of interim support in the short run. This can coincide with what's happening, like I said on the previous chart, with the dollar. Yep. So if CPI misses, we might see that 222 beaten, and possibly even 212, and then we're back to ranges we seen in October 2016. And then all this theme about a positive story going for dollar will come crashing down. Yep. So we are at a very crucial level at the moment. We think that this is a bottoming phase, and possibly we'll have dollar higher, yields moving a bit higher. But it all depends on what happens. If CPI misses again, then Fed cannot keep on going about the same rhetoric they've been going on about, which is that this recent decline we've seen in inflation is temporary. They will have to change their stance, which means we might not have a rate hike, and things start to move anti-dollar. And on the other side, we've seen with North Korea and US conflict escalating, that can also come in, and very soon, rather than being dollar sort of bottoming out, it can go further down. So this is a crucial period, I think, for dollar. Over the coming weeks, it might decide what happens over the next month, 2 months, possibly even 6 months.
Okay, so a massive data point this Friday. Rahul, thank you very much indeed for that.